The Dow traded lower today, trading below the T-line after a warning shot or a warning signal, which is a doji Harami. But notice where it traded. It traded at the lower end of this candle right here. That meant the bears were starting to take control, but they hadn't closed below the T-line. But the simple doji rule adds to our confirmation that the sellers are taking control because of the lower open and the lower trading. Remember, the doji rule is the price will usually move in the direction of how they open after a doji. This would imply that if we saw weaker pre-market futures tomorrow, there's probably more downside. The uptrend is over for the time being. Add the factor that the NASDAQ as well as the S&P 500 and the transportation index, which all have been trading above the T-line, did bearish Haramis today. Remember, the bearish Harami tells you that the buying has stopped. But the other indicator is they haven't been able to close below the T-line. So you've got a bearish Harami telling you the buying has stopped. You also have the uptrend still trading above the T-line. It makes for a very simple if-then analysis. If it opens positive and trades positive, then the T-line is still acting as support. If it opens lower and starts trading below the T-line, then the bearish Harami is confirming and there's probably more downside. In either case, the candlestick investor can be prepared to take advantage of closing out positions or maintaining long positions based upon how they witness the pre-market futures in the morning. The visual aspects of a pattern breakout is very easy to recognize using candlestick analysis. The fry pan bottom in our recommendation on VC was very simple. We could see there was a buy signal right here on the 50. Started moving up. If they're doing a buy signal with stochastics coming back up, where was our next likely target? First target was probably coming up to the where a fry pan bottom pattern would make a decision at the breakout level. If it broke out, where's the next likely target? Up to the next major moving average. This is not rocket science. This is merely identifying the signals telling us what the bulls and the bears are doing and where the places are that exuberant buying or selling comes into place. That same visual analysis allows for investors to take advantage of where the bullish sentiment is really coming into vogue. There's our Morningstar signal right on the T-line after a flat trading handle. Our scoop pattern. What's our scoop pattern illustrate? A slingshot effect likely to happen to the upside. You add this to the full chart where you have a fry pan bottom that produces a strong price move, and then the consolidation is over when we see the next candlestick buy signal doing what we call the classic pattern, a fry pan bottom that produces a strong price move, a J-hook pattern that has a prerequisite of a strong price move, now moving into the next wave. Not only does it tell us when we can start buying the next wave, but it also gives us a good impression of how big the magnitude of the next wave will be. This is what we want to be able to do, is identify when it's time to start buying. The same scenario can be applied to RARX, RARX. We can see how wave 2 is now starting out with a strong bullish sentiment. So you got your fry pan bottom, wave 2 breaking out into new territory. This one can be bought on positive trading. The bobble breakout is also a very lucrative high probability trade setup. there was a resistance level from months ago at this level. But look at our J-hook pattern that came back up through that resistance level. First of all, it resisted right at that resistance level. It pulled back to the T-line. Remember, the T-line is a very simple trend indicator that as long as you're trading above the T-line, you're in an uptrend. And then if you see that J-hook pattern setting up and breaking out through your resistance level, we can pretty much calculate there's going to be a strong move after that breakout. Same analysis can be applied to Western Digital. There's our bobble breakout with kind of a doji sandwich, which implies there's more upside. Also, look at the overall pattern. There's your fry pan bottom, price move, pull back to where? Right back to the T-line when you see buy signals. Calculation can be that if this is wave 1, wave 3 should take Western Digital up into about the $75 range, another 20-point move like this move right here. Utilizing candlestick analysis is just graphically recognizing what is happening in investor sentiment that occurs the same way time after time. That'll be it. We'll see you in the chat rooms.